Research shows having conversations about money builds financial confidence and can lead to better financial outcomes. That's the exact message behind Financial Literacy Month in Canada. How can we make the subject of money less taboo? How can we discuss money and finance with family and friends without being judged? And what can we do to create good investing habits? That's coming up on the Upside Plus. Hello everyone, I'm Emily Ananuevo and welcome to the Upside Plus. Understanding how to invest is a key component of financial literacy. It helps you make decisions that align with your life goals, risk tolerance, and timelines. And these decisions could have a significant impact on your long-term financial well-being. Here on the Upside Plus, we've shared tips on how young people can start thinking about investing, how parents can help their kids, and now, how do we take all that great information and form consistent investing habits? Today, we connect with leaders in the Canadian financial space who share their thoughts, wisdom, and tips on how to be successful in investing. First up, business writers Brian Borsakowski and Rob Carrick sit down to talk about the personal financial space and how it's changed over the years. Plus, Rob shares some investing tips he's collected throughout his 30-year career as a financial journalist.
Thanks, Emily. Rob, it's great to be here with you. Thanks for joining us.
I'm happy to be here, Brian.
So we want to learn some tips from you. You've been doing this, writing about personal finance for a long time. What are some tips that you would give people who are just starting out investing?
Diversification is number one. I mean, I know there's this idea that investing is all about home run hitting. You know, you want to get it. You want to get into a stock that's going to double and triple, and some have lately. So I can't say that some people aren't actually having success doing that. I think the best way to be successful in investing is to be diversified, to have a portfolio that has stocks from around the world, Canada, the US, internationally. Some bonds, young people need only a small amount of bonds. That's just sort of stabilize the rough ups and downs of the stock market. But you know what? If you said, I am comfortable with stock markets going up and down, I would say you could go all stocks, but you have to be diversified, own many sectors, many countries. Don't just go for the biggest AI stock you can find.
One of the tips that I have written about a lot, but unfortunately didn't heed myself, is starting early. How important is it to start early?
Brian, neither did I. I did not start early. I started late. And you know what? I wish I did start early, because the compounding, that's where you earn gains on your gains, can last for 40, 50 years. If you started in your 20s and you didn't access your money till you were 70, it's like decades and decades. And, you know, if you earn an average 4, 5, 6, 7% on that money, it's astounding how much compounding will generate for you over the years. And what I think people sometimes think is, oh, I need to have a substantial amount. But one thing about the new trading platforms and the new investing platforms is that you can invest a little bit. It's not, I have to buy $1,000 worth of this investing product. It's, I can buy $25 worth of it. That's what I have, and I can use that money to buy, a small piece of it. That enables you to start young, and it makes it accessible to put even a little bit in per week or per month. And I would encourage you to do that, to get into this habit. If at the end of the week you got a few bucks left over, invest it. Don't spend it. And that money you get going early will, when you retire, you'll be amazed at how much it's worth.
Housing is on young people's minds. When I started writing about personal finance in my 20s, wrote a lot about housing, but the market's changed a lot since then. How can people get into the housing market today? What are you kind of hearing from younger people?
Well, younger people really want to get into housing, but they're nervous about how much it costs. And I would say get yourself a first home savings account. It's a great way to save for a first house. And if you never actually end up getting into the housing market, you could put that money into your RSP, and so it's some retirement saving. One thing I find, young people have a lot of anxiety. They feel they have to get into the housing market young, like their friend got in their 20s, and isn't that a great thing? You can buy a house in your 30s. You know, if it takes you longer to build up the down payment because houses are so expensive, it's okay. You can buy a house at 35. You'll work to 65 or 70. I think we're going to see increasingly young people today are going to be working past 65. They're going to be living to 95. So it doesn't seem that big a deal if you work past 65 to 67, 68, maybe 70. If you're working that long and you buy a house at 35, it is all doable. Do not feel in a rush. You're going to be living a long life. Take advantage of that and use some of the time to ramp up to buying a house. You don't have to do it by age 26.
How long have you been writing about personal finance for? How many years?
30 plus years.
30 plus years. What are some lessons you've learned over your career?
Everybody makes mistakes. And the trick is to identify them quickly and to try and fix them. But do not ever expect to be perfect with your personal finances. You will make mistakes. I make them all the time. I just am able to spot them and try to turn them around pretty quickly because of all my experience. You will gain that experience. You don't have to be perfect.
Rob, we'll leave it there. Thank you so much for sharing your insights today.
No problem, Brian. Happy to do it.
Emily, we'll throw it back to the studio.
Rob and Brian discussed some fantastic ways Canadians can improve their investing patterns. To expand more on this, one of our very own Fidelity Co-op students had the chance to sit down with longtime portfolio manager Joe Overdevest to talk about the fundamentals of investing. Take a look.
Hi everyone, I'm Angela Menta, one of Fidelity's co-op students on the finance team. On my segment of the Upside Plus, I will be posing few questions that young investors would want to know. And I'll be doing this with Fidelity's portfolio manager, Joe Overdevest. Welcome, Joe.
Thank you, Angela.
As young investors, it is so important for us to get a good understanding of the basics of investing, so we are able to make sound financial decisions. So let's start from the very basics. What would you say is the difference between savings and investing?
Savings is how much money someone will have after their expenditures. So whatever money they may have after expenditures, simply the savings. The next step is investing. And so if you choose to take those savings and invest, you are buying something you hope will go up in value or give you some income.
So would you say that me earning interest on my savings is actually an investment?
Yes, if your actual savings grows in terms of value or income, we would actually call it investing. In some cases, that could be like a GIC.
So what would you say are the different types of investments on the markets?
The two big investment groups would be number one, equities, and number two, fixed income. Equities would be buying stocks or buying a piece of a company, and fixed income would include things like bonds, GICs, money market. The difference between the two groups is generally equities is higher risk and a higher return though versus fixed income.
So what would you say are the different types of investment strategy a young investor like myself can take?
I think for investing for a young person in particular is a few key steps. Number one, educate yourself. And I think it's very important before you step into anything in your life, you educate yourself. And so these days there's so many great resources, podcasts, books, YouTube, social media in general, but it'll be very clear, watch the source of whatever is giving you information is very, very important. Number two, once you educate yourself, start small, walk before you run. Try to have a positive experience, because if you have a positive experience, you're more likely to invest for the rest of your life, which is actually more important than probably the initial investment you make. So again, just educate. Number two, try to have a positive experience, which may mean not buying the hot stock of the day, but just buying maybe a smaller investment and just easing into it before you go. And then lastly is try to do it for a long period of time. The power of compounding is something that, we might learn in math class or finance class, but it's a very powerful factor. And essentially what it means is if you start early and stay invested, you gain the incremental benefit year after year, and that's how you grow wealth.
Another thing I've heard a lot about is diversification.
Yes.
What would you say is diversification, and how can I diversify?
Diversification essentially is trying to limit your risk, as opposed to just buying one stock and saying, you know what, I'm all in on that, is maybe buying a mutual fund, an ETF, or buying a number of stocks. So one stock or one company or one investment isn't going to make or break if you have a positive experience or not. Again, maybe an analogy for the students out there would be, what if your school went to you and said, you know what, for 4 years, you can do nothing. And at the end of 4 years, you're going to do one test. And whatever that test mark is, that's your marks for all your classes for 4 years. Some people might say, this is pretty great. But what if you do well? That's good. If you don't do well, you have a bad day, bad luck, you were sick that day, and all of a sudden you go, wow, I had a bad result. What if I just did the work over 4 years, over all the different classes, all different assignments and tests? Would that have been a better reflection of my work and my talents? That's the difference between diversification and not.
Perfect. So would you say there is a specific plan or strategy that I can take as a young investor to diversify? Are there specific products or investment products on the market I can choose and diversify in my assets?
Exactly. I think when you first decide, there's a few steps. Number one is how much money you have to invest. So I think it's very important. Don't stress yourself out. You're starting to stress yourself out. You probably are investing too much. Again, we want to have a positive experience. So back to your original question, decide how much you have for savings and what you have you can put towards investing. So that's number one. Number two is your timing, because that's very important. Are you saving for a car, school, a house? And the timing of that is very important because the investment or asset you will buy later, the risk reward determines about the timing. If it's a very short term, then maybe it shouldn't be something that's in stocks, and maybe it's something that's in fixed income, like a GIC. The next step is once you determine the amount, the timing, is now what asset class. And if I said to you, it is longer in nature and we don't need as money for a while, maybe it's equities, like we said. And the last step, now that we've decided on our asset class, what investment products do we want? And that's where you can go into, do I buy a mutual fund, an ETF, buy securities directly? All these are the options of the different asset classes. So again, how much money you have invest, the timing of your investment, and then what that leads to is what asset class, and lastly, what investment product.
Awesome, Joe. I've learned so much, and I'm going to keep all these in mind as I start my own investing journey.
Next up, we highlight Fidelity's newest venture, Investly. It's an app designed to help investors on their investing journey and help them develop healthy financial habits. Here's Sarah Mocherniak, Manager, Channel Growth for Investly, to explain more. So Sarah, Investly is out for Canadian investors. Who is Investly designed for, would you say?
Yeah, thanks, Emily. We're really excited that Investly is officially live on the App Store and the Google Play Store. And Investly is really designed for any first-time investor or anyone who wants a guided investing journey.
Perfect. Now that Investly is live and people are slowly onboarding, what sort of trends are you noticing with the Investly audience?
Yeah, I'm so encouraged when we connect with first-time investors. There is such an appetite to get investing and start the journey, but I think it can still be really overwhelming. One of the recent stats that we heard from the Ipsos study that Fidelity partnered on, called the Young Canadian Survey, was that 64% of young Canadians said they wanted an easy-to-use investing platform, with 54% also saying they wanted educational content in some way weaved into that. So Investly, we're really excited that we truly offer both. We have articles on the app to help people through their journey, and we have a really seamless investing onboarding experience.
So we've heard the research. We know investors want to invest simply. How does the app work, and how do you make it easy for investors?
Yeah, we spent a lot of time thinking about how can we strip out all of the jargon when it comes to investing and make sure that when people join the Investly app, they really understand the whole process throughout. So what you do is you go to the Apple Google Play Store, and you download the app, of course, and create a user profile name, a password, and then you can really pick your own journey. So if you want to start by setting up a simple goal, you can do that and start to think about, okay, what do I want to save for in the short term, medium term, long term? Or you can choose to leverage our Learn tab, where you can access articles and videos that help start your educational journey of learning more. Or, of course, if you want to open up an investment account, you start by selecting first what type of account you want. So that could be a TFSA, a non-reg account, or an FHSA. And don't worry, we teach you the differences between all those different account types. And then we'll ask you a series of questions just to get to know you a little bit better as an investor. So these are all questions for us to learn more about your goals for this specific account. What's that time horizon that you have for this account? And what's your appetite to risk? And I think this is done in a really thoughtful way in how we ask questions, so that by the end of those questions, when we assign you a portfolio, it's really meant to serve the purposes that you want and the goals you have for that account.
Wow, excellent overview on how to use the app. Why is it so important to establish healthy investing habits early on?
Yeah, you know what? Time is your best friend when it comes to investing. And I think that there's so many challenges young Canadians have right now around cost of living or trying to save one day to buy a home. And you know what? It can feel like a lot of barriers as you begin your investing journey. But a huge advantage that you have is that time is on your side. So the earlier you get started, the more you'll feel confident in achieving those goals.
Sarah, where can people find more information on Investly?
The best way to connect with us is through our in-app chat. So download the app, connect with our customer experience team. They're an incredible group. They'll answer any and all questions you have. But if you want to learn more before downloading, you can go to getinvestly.ca, which is our website. And you can also check us out on Instagram at getinvestly.
Sarah, thank you so much for sitting down with me, sharing your insights about Investly and about Canadian investors. Thanks so much for your time.
Great. This was fun. Thanks, Emily.
And for our last segment, we wanted to round out our investing journey with 5 key steps to increase your investing success. Fidelity's Director of Tax and Retirement Research, Munro, shares why having a solid financial plan will add to your overall success. Now, I know you have some fantastic tips for Canadians on how to increase their investing success. So lay it out for us. What's your first tip, Michelle?
Okay, tip number 1. You want to think about what are your goals? Because that's kind of the fun part, right? And then create a plan to achieve those goals. With any plan, you will be more disciplined when you have that pen to paper with that plan. And thinking about pen to paper, it doesn't have to be literally pen to paper. You can put it in your iPhone or something like that in your notes section.
Exactly. That's where I'm always keeping my notes. Definitely for my family, I want to travel and I want to save up for my kids' education. Those would definitely be some of my goals.
Right.
Now, I know there's a lot of investing vehicles out there. Can you spell out a few for us and maybe some tax efficient accounts as well?
So thinking about what type of account do we want to use beyond your sort of savings account, because there are tax efficient accounts. Yeah. The most popular one for young people, if you will, is called the tax-free savings account. As well as there might be a first home savings account, a registered retirement savings plan, an RRSP. And, so these are tax efficient accounts, but then the investments inside those accounts, well, mutual funds, exchange traded funds, stocks, bonds, the list goes on and on. But really thinking about it, which account, and then the investments inside the account.
Now, Michelle, for your next tip, I know you have a really helpful phrase there to help Canadians kind of frame up investing. What is it?
Well, think of yourself as being a saver, not a spender. And I came up with this from Warren Buffett, like so well known. Yeah.
Legend.
And he said, you spend what's left after saving. You don't save what's left after spending, which is a bit of a mouthful. But I think it's really, you want to set aside a little bit from every paycheck, and it really adds up after time.
Yeah, for sure. That really makes sense. Michelle, any last thoughts, a summary for Canadians on how to create good investing habits?
Well, what I really want is people to get started. We've really tried to condense this. I don't want people to have analysis paralysis, if you will, and the importance of getting started. Another quote, Einstein, he said that he's quoted as saying is that the 8th wonder of the world is the power of compounding, which to me really stresses the importance of starting early. And the next best time is today.
We've taken you on an investing journey today and shared what leaders in the financial space have to say about good investing habits and, more importantly, how to stick to those habits. We hope you gain knowledge and know-how on what investing success looks like and what resources can help you along the way. I'm Emily Nuevo. Thanks for tuning in to the Upside Plus.